Miss, let's get to our corporate conversation on the show today. And the company that we are focusing on is Salasar Techno Engineering. It reported a good set of numbers for the first quarter. Revenue saw a 24% growth year on year. EBITDA also expanded by about 40%, and the margins also moved higher. To discuss these numbers and, of course, the outlook for the rest of the year, we have with us Shashank Agarwal, Joint Managing Director at Salasar Techno Engineering. Thanks very much for joining in, Mr. Agarwal. So let me ask you, I mean, revenue up 24%, your profits are up about 38%. What went into the performance? I mean, is it that you're seeing better execution? And what are the trends that you can forecast for the rest of the year?
So there's a lot of traction which is coming in from all the sectors, whether it is telecom or power transmission or railway electrification. The focus is on to complete the jobs as soon as possible. There's a lot of demand which is coming from telecom at the moment for the 4G strengthening and, of course, expansion of 5G in various cities. And similarly, the power transmission sector and the distribution sector also, there is a focus of the government to do a lot of work.
Mr. Agarwal, I think we've just lost that line.
Are announced.
Yeah, we can hear you now.
Get the job done. Okay, yeah. So I was saying there's a lot of focus from the government to execute the projects before the elections, are announced for the next year. So we are also in a position to execute these jobs in time as per the support from the government. So that is the reason that we are seeing a lot of traction coming in from all the sectors. And the execution, of course, is at a better rate compared to the previous years.
Okay, take us through what the execution has been like in this quarter. And also, if I'm not wrong, your total order book is at a little over 1,400 crores. What is the kind of timeline that you expect the execution will follow for these 1,400 crores as well?
Okay, so this order book would be consumed over a period of 18 to 24 months. But of course, in the meantime, we'll also have further order book building, and which will keep on continuing. We are seeing a lot of demand from the manufacturing sector also this year. A lot of demand coming from telecom, as I said. And, manufacturing this year will also be more than compared to what it was last year's.
What is the kind of order inflow that you had in just Q1 of this, if you can break it up, and what do you expect in the quarters to come? Like you said, of course, you will keep winning orders in the coming quarters as well. So what did you win in Q1, and we're well into Q2 as well, so if you can break that up for us? Okay,
so Q1, I think we got orders about 900 crores out of these 14 crores, which were partly of distribution and our overseas project. And we are expecting, at least 1,000 crores more order coming in our way during this quarter, the current quarter.
Okay, so what is your expectation for order book growth this year? Can you give some sense of, ballpark?
Yeah. So order book would probably, double from where we are today by the end of the year.
So if we have the right numbers, you are at just above 1,400 crores right now. So yes, looking to end the year with 3,000 crores plus. We can say that?
More or less, yes. Plus minus,
okay.
Yes.
So then tell us how the execution timelines are shaping up. Clearly, I mean, you're getting in orders, quite rapidly. And as you're saying, telecom is doing very well for you. What about execution and turnaround? A 3,000 crores order book, what does that translate into in terms of top line growth this year?
So there'll be orders which are going to be executed over 24 months, and partly there'll be some orders which will have timelines of 3 years, that's 36 months. And of course, being the EPC project, sometimes these projects see time overruns, and part of that might go into even the 4th year.
Okay. Mr. Agarwal, if you could also take us through what you expect on the margin front. I mean, in this quarter, I think you're around 9%, 9.1%. Do you expect that will improve as well, through the course of this year? Or do you expect it to stay? Because you have, I think, in the past quarter done upwards of 10% as well.
Yes, that's right. So we are also on the verge of, getting one of our new galvanizing plants commissioned in one of our factories. It's going to be one of the largest in Asia and among one of the biggest in the world. And, we'll have certain products which will be manufactured out of that, which will be giving us, of course, slightly better margins compared to the run-of-the-mill products, what we are doing today. And of course, going forward, we can see margins improving slightly over the year.
Okay, and slightly means 100 basis points, less than that, more than that?
Well, see, it's very difficult for me to comment on that, but yes, we see the margins going up. We would be range bound within 9 to 10% at EBITDA levels.
Okay, got that. Mr. Agarwal, just wanted to ask you about a segment that right now it's your smallest segment, that's railways. I believe you get about 8% of your business from the railways. Now they are on a order award spree. Left, right, and centre, we're seeing a lot of awards coming in from the railways. So do you see any further scope for your own company when it comes to that segment? What kind of work do you see yourself doing over there?
Yeah. So see, in railways, primarily there is a capex plan by the government of more than 1 lakh crores over the years, but that includes building up of new railway lines, building new stations, new signaling systems, and security systems, anti-collision systems. We are primarily into railway electrification sector, wherein we manufacture structures for railway electrification, and we also EPC job for that. And as on date, almost 82%, 85% of the broad gauge has been electrified already. So going forward, of course, the demand is going to be there because the government is targeting to complete all the electrification by the year 2024-25. We are also participating in certain tenders. At the moment, also we are executing orders, probably unexecuted order book in the railways as on date would be in the range of about 100 to 120 crores, with project size running from 170 crores to 200 crores, which was earlier. Going forward, we plan to do, but we are selective in choosing the projects, and we basically focus only on projects which at least have better margins.
Sure. Got that. Absolutely. The reason I asked is that just yesterday we got this news of 32,500 crores of further tracking projects that have been announced by the railways. Thank you very much. Get that perspective. Thanks for joining in, and good luck with the plans for the rest of the year. That is Salasar Technologies. Stock up about 1.5% for now.
All right, that is the management sounding very optimistic over there, especially in terms of the kinds of orders that they're getting from the telecom space as well. And they're telling us that the order book is likely to double by the end of the year, could be around 3,000 crores. But we do need to get into a short break. On the other side, we're going to track what's really going on with the market, so stay tuned for that.